Happy Sunday, everyone. I hope you guys had a fantastic weekend. In today's video, we're going to be talking about what the next steps are for the market. In my opinion, it's not going to be as easy to ascertain which direction the market is going to continue going, but we're going to try our best. We're going to talk about the SP500, the NASDAQ, the IWM. We're going to look at the 30-year bonds. We're going to look at the yields, the VIX, the dollar, and we're also going to take a look at the large tech stocks. There's earnings week this week as well with large tech stocks. And we're also going to look at the macroeconomic views and a whole bunch of other stuff. All right, so without further ado, let's get started with the video. So number one, let's just go ahead and take a look at the calendar for macroeconomic news this week. We have on Monday, tomorrow, we have some news coming out at 10 a.m. Not going to be very, very serious. Tuesday morning, we have flash services PMI coming out at 9:45 a.m. So we're going to have to be aware of that news dropping at 9:45, and then at 10 a.m. we also have news at the manufacturing index at 10 a.m. Wednesday, crude oil inventories come out at 10:30. Not going to be that important. But then Thursday morning we have GDP numbers coming out at 8:30. So that is obviously going to take, we're going to have to tread lightly heading into Thursday overnight. And then Friday morning, once again, as well. So Thursday and Friday, we have very, very important news coming out at 8:30 a.m. We have core PCE price index news coming out at 8:30. So there's that. We basically just have to be cognizant of what's happening Tuesday morning and Monday morning during market hours. We're going to see news. And then Wednesday, we're not going to see that much news. But Thursday and Friday, we're going to see a lot of news pre-market. All right. The next thing we're going to have to take a look at is earnings this week. So we're going to have a continuation of earnings this week for various economically sensitive stocks, for finance stocks. We're also going to see a lot of airline stocks having earnings this week as well. But obviously the big companies that we're going to see earnings out of are Microsoft and Tesla. Microsoft is very, very important. And then, of course, we're going to also have Intel. But Microsoft is obviously the big kahuna so far this week. And depending on how Microsoft does, since Microsoft is now entering it, they're really trying to double down on Bing, the search engine, this could also affect Google. So if Microsoft does really well and they start giving some sort of guidance or something like that in terms of how well their search engine and everything is doing, since they also just got they bought 50% of OpenAI. So OpenAI is the company that manages ChatGPT. So they basically created ChatGPT, that company, and Microsoft owns a chunk of it. So Microsoft is now applying ChatGPT to their Bing search engine. So they are basically targeting to take over Google's market share in the search engine space. So, there's going to be a lot of interesting stuff happening over the next few months and the next few years in terms of AI and everything like that as well. So this is definitely something that we're going to have to take a look at, and it's very, very important. So Microsoft, Tuesday after the close, and Wednesday after the close, we got Tesla. And for those who don't know, ChatGPT right now, it's not working. Basically, they on the weekends and stuff like that, a lot of people use it, so it floods their system. But this is literally what you do. You write a prompt into this. So write a TV ad about the status of ChatGPT. You write a prompt. You can be very, you can say, okay, write a prompt in 5,000 words about this subject. And AI generated, it will write an entire thing for you. So in case you didn't know what ChatGPT was, that's what it is. And currently there's a bunch of people there's a bunch of kids in high school and college and stuff. They're writing their entire essays and papers using ChatGPT. And the people that do know how to use ChatGPT, they're selling it to their other classmates. They're selling essays to their other classmates that don't know how to use ChatGPT. So this is definitely a very, very crazy technology. And this is the free version that everyone gets to use. So there's already advancements in AI in terms of the media section as well. So soon, literally, there's companies that you can type something in and you'll be able to create an entire script. You'll be able to create an entire like movie script. And then there's also AI generated imagery as well. So you'll be able to get that script and create an entire like movie using just words. So it's going to be pretty amazing what the next few years are going to come. Netflix and a lot of other these companies and stuff, they're already using these technologies and they're starting to play around with them and implement them. So yeah, these next few years are going to be very interesting. So yeah, definitely check that out. Let's go back to the stock market. So now the other thing that I want to take a look at are the seasonality charts for January specifically. So this is the Russell 2000, obviously the IWM. And we can see that according to seasonality, we get a dip into the end of January, okay? Relative to the SP500, it's very strong, but you could also see that it gets a dip at the end of January. When we're taking a look at the S&P 500 seasonality, obviously we can also see that there's a dip into the end of January. And then with the NDX, with the NASDAQ, you can also see that there is a dip into the end of January. And also relative to the S&P 500, we also see that it falls at the end of January. So I'm not saying this is an automatic guarantee to just be bearish, right? And of course, it's not perfect. We can dip into at the beginning of February, et cetera, et cetera. But the thing that I'm trying to like explain here is that with earnings, right around the corner, we usually get a run up into earnings. So clearly, this whole setup, every stock that you're looking at right now is very bullish. It's almost impossible to say that it's not. It doesn't look bullish. This is a very strong candle. Even if we get like a retest back to 392, 393 area, we can bounce off of that level and continue going up higher. This is clearly a very bullish setup. But the issue is that usually heading into earnings, we get a run up of bullishness. And then it's very hard for that bullish move to sustain itself. It's very rare for a large tech stock to have proper earnings, to have a very strong move. They have earnings on this day, and then they have an even bigger move and just sustain their price up here. It's very rare. So, especially in today's day and age and today's climate, I would be very surprised if Microsoft, Tesla, they beat earnings, they do really well. Tesla starts trading at 150, 160 again. So I mean, I'd be surprised. So currently, the chart clearly looks bullish on the SPY, right? We could take a look at the NASDAQ real quick. NASDAQ obviously looks very strong as well. IWM, clearly all of these stocks look decently strong, right? The IWM doesn't look as strong because a lot of the tech stocks are starting to get a lot of love. Heading into the end of the month, they're rebalancing their portfolios. A lot of the IWM related stocks were, obviously leading, and they were doing better relative to the SPY and the NASDAQ. So they took more profits out of the IWM and they're putting it into the tech sector so that they can, make their books look nice heading into the end of the month and into February. So that's currently what's happening. But very clearly, all of these setups still look bullish, and it's hard to automatically just become extremely bearish. But the only issue currently for me is that we have earnings, and we can take a look at some other things as well. All right, so there's only there's like 4 different bearish sort of things that we could take a look at, but they're not extremely bearish, and the market can continue going up higher. But we have to take a look at this. So basically, the bonds are showing weakness here. This is a clear reversal signal. We wicked up, showed weakness at another follow through down day, and basically it looks like we're about to break to the downside of this uptrend level that we have on the bonds. And we know that if the bonds are basically not heavily correlated, but they are generally correlated with the stock market. So if the bonds are doing well, then the stock market is also going to do well. So it's important to keep that in mind. We see that if we see that the bonds break below 129, then this weakness can start permeating into the overall markets as well. But currently, this is not an extremely bullish situation. All right, that's number one. Number two, not as much of a bearish situation here, right? Is the VIX crossed above on the MACD. Obviously, the price of the VIX is still falling lower, but generally, when we get a cross above on the MACD, we have at least 2 days where the MACD should continue at least moving upwards. So we see clearly that the MACD is moving upwards like this. The VIX is falling. Let's see if heading into next week, the VIX bounces due to this momentum and it starts moving upwards again. All right, that's the other thing that we have to just keep our eyes open to. And the third thing is the dollar. So the dollar, we just had a crossover. You can see that on the MACD, we just crossed above here. And the same concept, usually we get at least 2 days of upward movement. We've been stagnating here at the bottom. So basically the dollar has an inverse relationship to the stock market. So if the dollar is doing well, then the stock market should be falling. So, and the same thing with the VIX. Same thing with the VIX. So basically we see that the dollar is holding these levels of support. We would get these wicks below and they would just get another pop upwards. So essentially we need to see if these levels of support hold. We see that the MACD crossed above here, and we need to see now if this momentum can continue into the beginning of next week as well, similar to the VIX. So generally what I mean is when we get a cross above, we get at least 2 days of upward movement on the MACD. And now since we're still holding above support on the dollar, we could get a bounce upward heading into the beginning of next week. So if that does end up happening, then my initial response of the SPY basically coming back and retesting 393 can hold true, honestly. So 393, 393.50 are levels that the SPY could end up bouncing back towards. And then from there, we could see if this strength is actual strength or if this is just, short covering, essentially. So we'll see. But yeah, we just took a look at the dollar, the VIX, and the bonds. The fourth thing that isn't as bearish, but we need to take a look at is Bitcoin. So Bitcoin is, obviously you guys know how Bitcoin did really, really well, right? Over the past few weeks. This entire move from Bitcoin was due to Binance printing money, essentially. That is the entire move. Literally, that's exactly why this move happened. Okay, so Binance started printing money sub 17K. Above 19.5K, that's when other banks and exchanges and everyone started to print. That's when they started to buy way more. Above 19.5K. Okay, all of this entire impulsive move upwards was caused by Binance. So for this move to continue, Binance would need to continue buying and everyone would just need to basically continue printing money. And that is most likely not going to end up happening. Okay. One of the scarier things with this whole Bitcoin move is that Binance basically said that we could read this together. The banking partner that services your account has advised that they are no longer able to process Swift fiat USD transactions for individuals of less than $100,000 as of February 1st, 2023. All right. So basically what this means is Binance, the world's largest cryptocurrency exchange, said that they would only be able to handle user transactions of more than $100,000 as the bank decreases exposure to digital asset market. Now, as of February 1st, so that's basically less than 2 weeks away. So this is pretty interesting news, honestly. So it's going to be very interesting to see how this affects the price of Bitcoin and everything, but it definitely, I mean, I don't see how it won't. So because this news came out, I mean, obviously this is not like 100% guarantee. Like the crypto markets are very, very manipulated. So they can say something like this, and then next week they could just come out with something completely different. But that is, it's basically letting people know that I don't think, like, being extremely bullish up here doesn't really make that much sense. So for that reason, if Bitcoin is not, so Bitcoin is like the poster child for risk on, all right? So if Bitcoin is doing really, really well, that means like the Russell and the overall market is doing really, really well also. So if Bitcoin is starting to have some sort of bad news, right? It usually means, because they're also in tune with when the markets and when like money would move out of the overall markets. So a lot of with Bitcoin, they understand, they have all the numbers and everything sitting in front of them. So they align their news proportionate to when these different occurrences with liquidity and everything will happen. So they literally, like, they can say, okay, like, all right, so I see that the SP500 has like, you know, they have all of the data literally right in front of them with all of the option pricing, the gamma, everything, every single data point. So they can literally say, okay, so this is what's most likely supposed to happen on the S&P 500, the Nikkei, the German markets, everything. All of this stuff is supposed to happen, for example, on January 26th. We're going to start releasing some news ahead of time. And once that stuff does happen on the overall markets, we'll be covered and we won't really look like the bad guy and we won't look like we've been blindsided. That makes sense? So that's basically what they're doing. And for that reason, yes, so now when just taking a look at this, right, we can head back up to 24 or 25,000 very easily. This can still continue melting up all of the other funds and exchanges and everything that entered later. They can push this up to 24, 25. But then if Binance is not putting as much money in, which it seems like they're not, and this news is obviously very, very bad. It's basically telling us that Binance, which is the largest exchange, which is the largest printer, is going to end up stop printing money soon. Basically stop buying as much Bitcoin. And then for that reason, I think going short on Mara, maybe even getting some like puts, like maybe like $4, $5 puts for the summer, the end of July or August, I think would be really, really good, in my opinion. I could be wrong, but I'll definitely take a look at that on Monday. We'll see how the market and everything is, especially how futures are. Be the best case scenario if we get a bit of a bounce upwards on Mara as well. I'm not sure if whatever, but definitely getting some longer term puts with this news as well, I think is going to be the play here. Maybe even for, 2024, just to be super safe. Even if we end up, getting a bounce on Mara back up to $10, $11, it's going to be something that we're going to hold like very long and indefinitely. So most likely what I'm going to end up doing is, especially if I'm shorting Mara, especially if Bitcoin could end up going back up to 24, 25, I'm going to have a starter position for probably 2024. And if we get a starter position, and then if we get another bounce up, Bitcoin hits 24, 25, then we're going to buy a bit more aggressively for, say for example, Mara is at like $10. We're going to probably buy $7 calls, $7 puts. Right now, we're probably going to buy $4 or $5 puts, depending. I haven't even looked at the option chain, but that's my thought process on that, especially if Bitcoin is going to end up bouncing or end up falling back. This is like going to be, in my opinion, a pretty decent play. So yeah, man, it's tough to say. It's tough to say which overall direction everything is going to go. It's not as easy as it was last week, where we could have it just looked like a clear short. Now it doesn't look as much as a clear short. I was also showing how last week, getting a close, we needed to stay below 393, 394. That would basically be a very, very good level to remain below. But the fact that we closed above 395 is very, very bullish. But we've also seen many instances in the past where we've had extreme bullishness only for it to fall and you know, stuff like this. So we can't just automatically become extremely bullish, but this is definitely a bullish situation, but we're heading into earnings week. So a lot is still up in the air. We're just going to have to take it one day at a time. It's not going to be as easy to just blatantly just say to go short. So yeah, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.